Hello, traders. This is Tom Alexander. It is Tuesday evening, July 29th, and we had another very, very interesting day from an auction market perspective. Intraday, I am including the live trade room recording that includes an ideal auction market trade setup. And this is a recurring setup. It happens over and over and over again, and you can follow the progression in real time of what we were doing in the room and why. Please subscribe to the channel. If you like this video, there'll be much more coming on trading price action through the lens of the auction market process. Hope you guys find value in this and enjoy it. Talk to you again soon. Good morning, everyone. It is Tuesday, July 29th. Wow. It's 9:12 a.m. Eastern time in the US. This is Tom Alexander. This is the live trade room recording. Welcome to new all-time highs Tuesday, followed by new all-time highs Wednesday, Thursday, and Friday, right? Uh, the musical chairs phase continues. It's really quite remarkable. Uh, ranges have narrowed, as you typically see in extended bull trends, and a sign that something may be changing is when this range begins to expand. Now, looks like we're going to have a gap up opening. We'll see whether or not that gap holds, but it looks like we're going to have a gap up. Uh, we'll just see what transpires. I don't have anything to add to what I have been saying, what is in the reports. You know, the Russell is in a balance area just below a ledge that's been forming all month long. So that's sort of interesting. If it were to take that out, that would be an interesting catalyst for perhaps some short-term acceleration. The Dow is also in a balance area. So there are positive structural uh, signs here. It's easy to focus on the verticality of the SPX and the NDX, but if you look over at the Dow and the Russell, they're in balance areas, and if they break to the upside, that implies an initiative move higher in those contracts. So let's just see. Okay, it's about 9:40 a.m. Eastern time, and it's way too early to get a good confirmed reading on stuff. But breadth is it's plus almost 500 for what it's worth. That's approaching the high from 2 days ago. Uh, the NDX is just absolutely screaming higher, uh, unaccompanied as usual by almost everything else. It's followed by the SPX, the Russell, the Dow, the usual suspects. So we'll give it a little bit of time here. Okay, having a little bit of retracement here towards the gap. Let's see they stop it on a dime and rip it higher here. I love this view, especially when we gap and it's early, because this gets noisy. It's hard to really see, get perspective. This is the cash market, so we'll see if they're going to rip it higher from here, take it lower. Who knows? Okay, it's 10:03. So we've been open long enough for things to settle in and get some semblance of what is real and what is not. Uh, we came down, tried to close the gap, couldn't quite do it, had a furious, algorithmically driven stop sweep back to the upside that we've all come to know and love. Now we're in a narrow range. We are in front of the Fed circus today and tomorrow. Uh, trend is up in all time frames at the moment. You know, I'm sort of, I'm flat. I'm sort of neutral here from a day trade perspective. I am building a short position in leveraged ETFs in my swing trading accounts. I'm not looking for an end of the world drop. I'm looking for something resembling normal. That would include, I don't know, 1% retracements on the daily charts. Uh, again, I think we're in sort of a musical chairs phase of the current rally. We're up 40+% in the NDX off the April low with hardly a blip. So that's where I am, and I'm willing to trade this from either side, though I have to admit I'm a little bit biased to the short side just because we're so extended on the larger degree time frames. But you got to be careful with that. Note to self. Let's see, what is Brett doing? Hold on a second here. Brett is plus 400. Diverging against today's cash session high as usual, but we see how effective trying to road trade that has been. So be disciplined and don't let your narrative get in the way of being objective with trade direction. Again, note to self. Okay, this is a little balance area here. You can buy it above here. You can sell it below here with a stop at the other end. You know, sort of 50-50, but it has a great reward to risk. Now, the problem with that trade setup, and I'm just saying there's always, you know, a bigger picture. Now, if we're going to, you know, you could get caught in noise and it not work, but you do have a little bit of balance near the midpoint of today's range. And again, long above here, short below here, your risk is about as small as it gets for the potential return. But this is a type of thing that I like to look for where I have a very defined amount of risk and my potential return is to or through today's high or to or through today's session low. Okay, it's 10:20. This setup is getting better and better. And it's also a really good illustration of of why I like this 5 minute cash channel. Now I'm trading futures. Now you could actually trade the SPY on this if for you cash traders, if that's what you want to do. I'm trading futures, but this shows me clearly the setup. This is a little bit, noisier because futures are sort of whippy around within a 5 minute range, much more so than is apparent in the SPX. So, but this trade idea continues to increase in my mind in potential and in validity because we've been in this balance area for we're due for an initiative move in this time frame out of this balance area. Okay, so the market broke below to the downside out of this balance area. Now, what you want to see you want to see it continue pretty quickly, giving it room back up to about 64.34 or so. That's if this trade is going to work, that really shouldn't be taken out. Uh, in a situation like this, you can have these false breakout deals where they run the stops and then jerk it right back up through the range. And in that case, you're back into randomness. And we want to avoid randomness to the greatest degree possible. Most intraday trade is randomness, and we want to stay out of it. So this, right now, this is a test. Uh, there's sort of running stops in here, latecomers that use two tick stops once they get in. We'll see if this is going to be real. I mean, this trade has a lot of potential, but if this comes out, I don't want to be short. If I have to go back in, I'll go back in, but that would invalidate the trade to me if we take this out. Okay, it's 10:37. So if you're short, you want to see some acceleration soon. This is an inflection point in here. And, they could jerk this thing 10 handles in 2 seconds because it is an inflection point. So it's not like everybody in all algos don't understand this is an inflection point. Now, looking at some contextual information that we look at that once in a while is helpful, has not been lately, but uh, we have a higher high, yet another higher high in the SPX, the cash market. Brett did not, at least at the moment, is not confirming that. Not that that has mattered for about the last 30 days, but eventually it will matter. Anyway, if you're short, you like to see this. It doesn't, again, you cannot rote trade this. It is something that, as you know, we all use. It's far more effective in identifying lows than it is highs. However, it's one of these things where if you go back and look, almost all pivot highs of any significance occur with this divergence. The problem is there are between those good signals, there are about 7 dozen false signals, especially when you're, in the top picking thing. Now, to the downside, it's more effective and it's more binary. But anyway, it is what it is. It is rolling over. And if you are of a mind that 1% declines could possibly begin to occur in the market, this is the type of thing that will typically preclude that. Okay, it's 10:45, and you can see we've taken out today's early low. We're still in this gap. Now, again, this is going to be an area where you could get some pushback just because algorithms may be programmed just to start worrying and buying just because we're at last night's close. I don't know. I can't figure that. You can't trade that. Those guesses, I'm just guessing. But anyway, I'm short. I am not pulling the trigger on taking profits yet. I think this trade has a lot of potential. Now, if I have a flaw, it's giving back profits. So just FYI. Uh, let's look at the potential for this trade. All right, this is yesterday's cash trade. This is the day before's cash trade. This is the day before that. You can see how narrow these ranges are. That's typical. Again, that's typical in the late stages or mature stages of a bull trend rally. So this is an obvious inflection point, like yesterday's close. And then the next one from an auction market perspective is yesterday's cash session low, which would be right here. So, we're making lower lows and lower highs. We're below the moving averages on futures because it's continuation. We're below this moving average here. These haven't crossed, but that's because of their moving averages of data, and the data, you got this big gap in data between the futures and cash. You understand that. So at this point, you want to see this thing continue initiatively lower. I would not want to see it at this point above about here. If we get above here, then we're back into randomness, and maybe we're in this super narrow range waiting on the Fed circus events and talk, etc. So if you're short, I think that's the side to be on. It has a lot of potential. Uh, but let's be smart, use good trade management. If all of a sudden you get the big gift, take something off. And what is the big gift? Well, it's some sort of a series of super wide range bars to the downside, et cetera, because it's highly likely if you get, these two super wide range down bars, you get retracements you can add back on, but that's a strategy tactic for another time. But I think you should be short now or flat. Okay, I'm back. It's 10:49. I just noticed this. I want to show this for more context. Now, I mentioned this earlier this morning. Look at the Russell here. It's in a multi-day balance area perched at a major inflection point. So is the Dow. So if these are balance areas, it's the same concept. This is auction process of development is a fractal process. You have the same processes of development occurring on the short-term charts as you do the longer-term charts for the daily, weekly, et cetera. So you have balance areas up here in two of the primary US trading indices. If these break to the downside, it implies a move of similar proportion to that of the structures that you're looking at. So that's just, again, that's contextual information. A lot of day traders do not use context. They just push buttons and hope for the best. Don't do that. Okay. 10:53. This is what you want to see. And it all started with an auction market setup. This is a balance area. We traded lower, formed another balance area. Now we're breaking initiatively lower. There's conviction here, this wide range bar. Uh, a target would be yesterday's cash session low. Remember, we haven't had a 1% retracement lasting more than a few hours in months. What would 1% look like? Well, let's see. And again, that there's nothing scientific about this. I'm just, for perspective, throwing this out. All right, from top tick here, 1% would be a lot lower. This, when you haven't had much decline, something like this feels like it's a crash. So we'll see. Just, you know, trade management is an individual issue. You don't want to give up. You should have, anybody that was listening to me up here should have profits in this trade if you took the trade. There are a number of different ways you can manage a trade like this. And again, it comes down to your trade plan, how you typically trade, what you're comfortable with, all of these things. But you wouldn't get any pushback from me if you want to trail a really tight stop on part of your position. I will share that I think this trade has a lot of potential. I haven't taken anything off yet. If we get another wide range bar, we get close to yesterday's cash session low, then I will take something off. But frankly, at this point, I would rather be looking for a retracement to add to this than I'm eager to get out of my trade. Okay, 11:20 a.m. and we are sort of in the middle of nowhere from an auction market perspective, meaning where could we stop? And there's a volume node in here. I get that, but the real important level is the cash flow. Uh, you know, as I've said, there's no exact formula for taking profits. When you're trading, this is why you trade multiple contracts. Yeah, I think you're going to see this level. Now, I will be taking partial profits or trailing a very tight stop if we get some sort of gift wide range bar, then that trail stop. But uh, I will be looking to take profits some basically somewhere in here. Now, they can game it and jerk it back up in here and run all the stops because everybody and their brother knows this is going to be an important inflection point. And so that's sort of my plan. Now, the other idea here is that okay, here we go. This is good. So you might want to start tightening up your stops a little bit. Looks like they're jerking it into this area. At some point during the day, you're going to come back up and test at least this faster moving average. That's maybe an opportunity to add to your trade. Uh, Again, this trade has absolutely huge potential. If you look, I'm looking at the futures daily charts. There's a potential massive selling tail forming in the NQ. The Dow and the Russell are in mature balance areas and they look like they want to break to the downside. So there are a lot of things here from an auction market perspective that are pointing to the potential of short trades. Uh, Now, as we all know, intraday trading is noisy, et cetera, but you got to be short or flat this market. And I think looking to get short or shorter. Okay, 11:28, and here we are. We're finally testing a previous day's low. Let's go up in time frame for a minute here. All right, here's the SPX 30-minute chart. And this is an important level. Your next important level is going to be down here. You can see you've got a cluster of lows in this area. So let's do this. Now, this is not that far down. I mean, in the big picture. And we accelerate. This is what you want to see. This is where strategic tactical trade management comes into play. As I said, now you probably want to be trailing a stop on part of your position, maybe. And really, this is turning out to have a ton of potential. At some point, we're not gonna continue down this rate of change, and you will get a chance to add to this trade. That's how you need to be thinking. Okay, getting some pushback in this area. That's not a big surprise. You can see we ran the obvious level. Now they're sort of flirting with it, churning, chopping, etc. At some point, you're going to have a move back up into these moving averages. As I said before, based on information at hand, it's probably an opportunity to add to your trade, or if you're out of your trade, to get back in. Now, something I want to point out here. Uh, it's increasingly obvious from my nightly perusal of YouTube that uh, day trading has never been bigger than it is now, and it's only getting bigger for a variety of reasons. It's a get rich quick. It's used as a get rich quick scheme by so many. But anyway, I don't want to get on a soapbox here, but I don't know of another methodology that consistently allows for an objective, logical view of how the market develops and how to take advantage of that. There are guys, and some of them are very successful traders. I get that. That's fine. It's just not for me. But there are people out there that literally are trading for ticks. And I think that now that's fine if you want to do that, but it doesn't have to be mutually exclusive. When you can identify an opportunity that has an incredible reward to risk, you need to have a way to take advantage of that. And it starts with your worldview of how markets work. And the worldview that I have is this auction market process of development that you guys that are listening to me in the room also have. And it's something that I think is unique that we have, and increasingly unique because it's such a twitch, get rich quick milieu. I don't know I mean, and things that are not always this neat. They don't always set up perfectly. There are losses, et cetera. You guys know that. I've shared that with you. I have tons of losses, et cetera. But once in a while, it sets up and you have a very well-defined situation. And that's what we had in here. Now, most traders would have looked at this and said, okay, there's nothing here. This is another sucky day, blah, 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 blah. And you had a balance area that formed. And it formed inside the range of a narrow range day. So taking the break of this was one of the trades you almost had to take, whether you went short or you went long. You can go back and listen, and that's what I said. I didn't bias it. I said you can go short or long. The trade has a great expectancy. So if you took the short trade, hopefully you're still in at least part of your position. And the reasons for you still being in that are the bigger context of the auction market and how we view. Now, this is the ES, but you don't view it in a vacuum. You're looking at the NDX, you're looking at the Dow, you're looking at the Russell. Where are they in a context of this? And when you can put all those together into a confluence that meets at a point in time, then you have the potential for something like this. So it's pretty cool when it works, right? Trading can be extraordinarily frustrating. It can be, and it is quite often extraordinarily frustrating. So when you have days like today, and in my opinion, you have to have days where you catch the big trade. Uh, there's a lot of pushback in the bro tick trading world where they're just no, no, bro, I'm out by 10:30. Okay, that's not for me. So let's enjoy the ride here. You can see we're approaching another level down here. Where are we? Let's look at the cash chart. Here we go. Yeah, we're approaching the next level here. Okay, 11:43. Another thing, if you go back and listen to what I said earlier, also I said I'm building a short position in leverage ETFs. So that's working well too. You can trade this in all time frames, and I trade all time frames. So this auction market stuff is not a one trick, get rich quick intraday trading, three tick punting. Okay, we could be, by the way, it is 11:56. We could be coming into an opportunity to get short or get shorter for those so inclined. Yeah, I mentioned earlier, at some point in all trends, you come up and get close, if not exceed at least the faster moving average. So, if unless we're just going to bungee jump all the way through this range, which is always possible, as we know. But I think at this point, you get the benefit of the doubt to the downside. And this should be probed at some point, this area in here. Uh, so this area, rather broad area, depending on your risk tolerance, is probably an area to consider short trades under the assumption today is not going to be just one of these days where we dip and rip. And, we've seen a lot of those days. That's always a risk, but I would be looking to short in this general area for a probe of this range in here or lower lows. Okay, it is 123, and you can see we've traded up into this faster moving average, up into this zone in here. A lot of initiative downside trading. We've come right up into this volume here, as a matter of fact. I'm sure all the book map Ramagamma crowd. I'm sure there's some sort of special orb in here because of this volume, or you can just look and see. So this would be an area to consider short trades. You really probably don't want to see it get much above this area for very long because, there's always that lingering possibility of the surprise ramp through the range. This is an inflection point. Again, there is volume in here. So this is an inflection point. Now the trend is down. We do have a higher high, a higher low, and a higher high, but in the bigger picture, uh, I think that you still want to be favoring the short side of this market. Okay, it's 1:40 p.m. Eastern time, and we've broken lower away from this balance area. As you can see, you don't want to see this taken out now. If this is taken out at this point and you're short, bad things can happen. We came up, tested this volume node, tested the slower EMA. We're in the afternoon. So I wouldn't let shorts go above this level. And if you get above this level, I'd be hesitant about shorting. I'm not saying I wouldn't, but I'd be hesitant. If you'd have to have certain things happen, but above here is not a good sign for shorts for the rest of the day. We're sort of in a chop and churn phase here. We could, today is not particularly wide range yet in the big picture. Now, the last 2-3 days have been narrow range, so it feels wide range, but it's not. Below today's cash session lows, you are increasingly approaching the edge of an elevator shaft from the ramp up on the 23rd. So there's still a lot of downside potential here for a lot of reasons. Have well-defined lean to the upside. We'll see what happens. Okay, it's 1:55 p.m. Eastern time. Wouldn't be too surprised to see this thing develop into a range of chop fest in this area that chops up people that get long and then chops up people that try to get short. uh, it's 1:55, so we have a long way to go before the end of the day, a couple hours. Uh, this area in here and this area down here are your inflection points now. Is it possible that we take this out and just continue to waterfall decline? Yeah, it is. But that's not the higher probability. It's a possibility, but it's not the higher probability. So some chop and churn in here. Would not be a shock at all. Okay, it's 2:26. I'd be a little bit careful about buying now. Frankly, this the level you see here. This is a downside inflection point. Let's do something real quickly here. Let's change this to the NQ. And let's watch them together for a while. A lot of times you'll get divergences at pivot lows. Here's one right here where you took this pivot low out in the ES, you didn't in the NDX or the NQ. I keep a cash chart of the SPX and NDX on the screen, as I've shown you guys before. So anyway, but this is why I wanted to come in. But this is a major inflection point. You want to be paying attention to it. Now let's look at this from another perspective. Okay, this is the 30-minute SPX chart. Okay. And what we have potentially, maybe you can call this a lower high. If you take this out and spend any time below here, that flips the trend. That is a trend flip, potential trend flip, at least on the 30-minute time frame. We're also trading below these moving averages for the first time in a long time. So all of those things, and again, this is not something you can rote trade. This is contextual information. I got short up here on the 5-minute chart, as did probably a lot of you if you were watching. Now, this is what's really interesting, breadth. And I understand the dynamic here. I understand breadth is the broader indices, and the SPX and NDX are driven by the most wonderful, magnificent 7 stocks that have ever been. And that drives the SPX and NDX up and down, whereas the rest of the market may or may not participate. However, that's not going to completely eliminate the idea that at some point breadth gets down to an extreme, contracts to an extreme level. And the point of showing this is that if nothing else, we're nowhere close to an extreme in breadth. I mean, breadth is barely negative. Now, does that mean this is just a magnificent 7 driven drop and we're going to rip higher? Or does it mean we're in the early stages of something to the downside? Well, the answer to that question, you don't have to know, you don't have to guess. You just follow the migration of value. And the migration of value, you can follow it a number of different ways. You can follow it by looking at the high volume nodes and if they're moving up or down. That's from a market profile perspective. And you're in a node now. There's a lot of stuff over here. But until at this level, this was a volume node up in here. Well, we ripped through it today. This was a minor volume node. And, we talked about this earlier on the 5-minute chart. So that's one measure of a migration value. The simplest measure is the market making higher highs and higher lows on a bar chart or a candlestick chart, whatever chart you use. And right now on the 5-minute time frame, you're sort of going to chop and churn, but the trend has been lower lows and lower highs. So interesting times. Now we still have Fed Circus tomorrow. It starts at 2 o'clock with whatever they say, and then you have Powell speaking at 2:30, and what he says or doesn't say, and how it's interpreted, and what the computers pick up on, blah 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 blah. So tomorrow has potential to add to some volatility in either direction. Then, of course, you have the continuation of the stream of earnings this week. I think I heard somewhere, maybe it was on the radio on CNBC when I was driving around, that 30% of the S&P reports this week. So lots of stuff going on. It's interesting that NYSE breadth is basically dead neutral now. Okay, back to what's most important to us DGen day traders. And that's today's trade. And this, this is a great candidate for chop and churn, and that's what we're doing. It's what we may do until 15 minutes until cash close. We'll see. Okay. So they started the move here, huh? Now, let's see, it's 3:37. We're well into the hour of power. A trade back above this bar high would be probably a heads up that maybe this thing isn't going to just completely crater. Things are going to get squirrely in here. We're coming into the last few minutes of trade. We're in front of the real Fed circus tomorrow, so it's late in the day. I'm not chasing anything, not advised chasing anything. The short side of the market has been the correct side of the market to be on all day long. The levels have been great today. I mean, again, this is another lesson, and the market determines the levels. Me telling you what the levels are tomorrow beyond the day session high and some previous low or cluster of lows that I'll put in the report tonight, it's just an exercise in futility. Then you have the Globex trade, and it can all get erased then. So, during the trading day, you will always have ample opportunity to identify legitimate levels. There's not some magical mathematical formula you can conjure up every night before trade is started that's going to give you super levels. So that's one of the pervasive myths out there in trading land. So let's see. Let's go bigger picture here. I'm going to go back to the SPX and see where we are. Okay. And this is good. All right, here you go. So we're below this low from yesterday, and now we're into, you have a low here, low here, low here, low here. And we're heading pell-mell into that area, into the close. So going to be an interesting close, and tomorrow is likely to be an interesting opening and day. I'm going to be here through the close. I'll come back in and check in with you. I wouldn't be playing catch the phone and knife here. Okay, it is 4 p.m. Cash market is closed, and now we've added another spike into this area as we head into Globex and then the cash trade tomorrow. So this is going to be an epic level. This will be fun to trade around. They never make it easy, as you guys know, but this has defined itself as the level right here. Now, there is a fair amount to discuss. I'm not going to discuss it now. I will have the pre-market report out early evening for you guys. Have a good evening. I will see you in the morning.